Hey there, folks. Happy Saturday to you. Hope you're having a fantastic weekend coming at you live with this week's market wrap. And boy, do we have a lot to go over. And it's exciting. Can you feel it? Can you feel the love that is in the air? And I'm not just talking about the fact that Valentine's Day is coming up. I'm talking about the action that we saw in the market this week, especially on Friday. So listen, let's take a step back. Let's review what we've been talking about for the last few weeks. And I want to start out with the T2107 and the T2108, the stocks, percentage of stocks above the 200-day moving average and percentage of stocks above the 40-day moving average. Remember, we've been talking about the fact that we were due. The market was almost screaming that we were in need of a fairly significant bounce. Now, is this the beginning of that significant bounce? Look, it remains to be seen. We had a nice day on Friday. Let's see what next week brings. But let's take a look at some things that happened this week that maybe could provide us with the fuel to give us that continued bounce. So, let's look at the T2107. We got down into this almost, actually, we did get into the single digits, didn't we? Yeah, we got into the single digits, and, we basically had a nice little bounce there. Let's take a look at the T2108. Again, we got into the single digits and had a significant bounce there. And look at how fast these things can move, right? So we've had a very significant bounce in the T2107 and the T2108. Let's see if we can get some follow through and continuation of that next week. So what do we have going on? One thing we have going on is Sunday, we're going to get some data out of China. We may get some kind of an interest rate move or some kind of a monetary policy statement out of China that could provide more fuel for the markets, like Japan did on Friday. So when they went to a negative interest rate policy. So a lot happened last week, and I think one of the first things that I want to go to is I want to go to oil, because we've been focused on oil for the last several weeks, actually probably for the entire month of January. And what we were talking about was the fact that we didn't necessarily need oil to go to $60 a barrel, but we did need oil to stop going down. And we had that. We've had that happen, even though we've gotten a couple of bullish or bearish inventory reports over the last couple of weeks. Oil has been able to really kind of maintain, stay above that $30 a barrel level. And quite frankly, I don't think that we want to see a big V-shaped snapback in oil. We don't really want to see it, snap back extremely hard. What we want to see is we want to see it stair step its way up, right? As opposed to a big snapback that just gets faded again. We want to start seeing it base out, stair step up gradually, and that could be happening. I'm not suggesting that it is happening. I'm saying that that is what we would like to see, and hopefully that's the path that we're on. The other thing that was very interesting about, or is very interesting about what happened with oil last week, wasn't just the fact that it kind of stabilized through some bearish report, also the fact that it started to decouple from the market. So it actually started to decouple on the day of the Fed on Wednesday. The market was tanking and oil was actually up. Okay? Then on Friday, we got even a more clear picture that maybe oil is decoupling from the market, because the market was up significantly and oil was actually down. So we may be seeing the beginnings of oil decoupling from the market. I personally think that that may be a good thing. Okay? There were a lot of other things that happened last week Now, I was expecting a bounce back. I was pretty bullish coming into last week, and it didn't really play out the way that I had hoped. But we still did end the week on a bullish tone, right? The reason why it didn't work out exactly the way I had hoped is because of the fact that we did have the Fed statement. We got an earnings report from Apple that was good, but the guidance was not so good. We got a miss from Amazon on earnings, but then we also got a couple of earnings reports that were positive. So if we take a step back and we look at everything and we say, okay, what could give us the fuel to continue to move higher? So, we talk about the fact that the market is a forward-looking mechanism. We are a third of the way through earnings season, and honestly, earnings have not been all that great, and guidance hasn't been all that great. But for the sake of argument, can we suggest that maybe it wasn't as bad as everyone had anticipated that it would be? We just got GDP number on Friday, which showed, granted, it was small growth, but it was growth. And the biggest thing that happened this week is we had the Fed, who came out with an announcement that wasn't necessarily positive. It wasn't dovish, and it really wasn't hawkish. I mean, I saw there were several different takes on what the Fed had said this week, and it was really just more confusing. There was no real clear picture of the path that the Fed was going to take forward. So all throughout January, we heard almost on a daily basis how the Fed was going to raise the rate 4 times this year. It was almost every day we heard that from someone. And now we've gotten the Fed out of the way. We didn't get an increase, and we really didn't get any concrete indication that they're planning to raise the rate in March. And I think it would be significantly hard to do if you've got the rest of the world that is lowering their interest rate, like Japan, who went to a negative interest rate policy. And look, you can't fight the Fed, right? You can't fight the central banks. So I think we've gotten, at least for a couple of weeks, maybe we have a Fed who isn't coming out every day suggesting that they're going to raise the rate 4 times. That clears that out of the way. Let's see what happens. Let's see if China on Sunday does something that could also indicate easy money policy and carry over to our markets next week. Now we have earnings that are still going to be occurring. Google is going to report. Is Google, let's just take a look at Google stock real quick. Is Google going to do an Amazon, or is Google going to do a Microsoft? Right? It has already had a pretty decent move as it heads into earnings. If they disappoint, we could see a pullback to this trend line, right? If they beat, this thing could be going for all-time highs. It could be looking to take out 800. We'll see what happens next week. I think the tone is fairly positive as we move into next week. I think that earnings aren't as bad. Now keep in mind, the other thing that is extremely important, and I say it every time I do a market wrap video, employment is important. We've had announcements of layoffs. We've had announcements of store closings, stuff like that. But if you start seeing an uptick in unemployment, that is going to be something that is concerning moving forward for the economy. And we'll get some employment numbers on Friday of next week. So we'll see how this plays out. Now, we've already talked about the decoupling in oil. I think that there are going to be names in the energy sector that are going to do well. I am certainly not saying in any way, shape, or form that we have the all clear for energy names in oil. I think it could still be challenging. But the other action that happened on Friday that was very interesting, let's take a look at it. We had, along with oil, that was stabilized. Because of the move in Japan, we had a pretty sharp bounce in the dollar. Now listen, everyone talks about the fact that the dollar, strong dollar, is not good for, you know, our multinational companies. But listen, the strong dollar is not necessarily bad for our companies that are just based here in the United States, right? That do all their business in the U.S., that don't have any exposure to foreign exchange rates. So the strong dollar is not necessarily a terrible thing. And it was reflected in the fact that we had the dollar, which was up strong. And this one really stuck out to me, is we also had the IWM, which was making a really solid move. Okay? If we can continue this move and have the IWM, look, people, the stocks within the IWM have been beaten to a pulp. Okay? They are due. If you recall, I was looking for snapback play opportunities. There are still going to be snapback play opportunities. But if we get a continuation of this move in the overall markets, those, you know, we've been really focused on volatility for most of January in the chat room. And if we continue to see bounces within the market, you're not going to see these extreme moves that we were seeing in volatility when the market was selling off, right? A lot of times, what we see, and I'll point this out to you with DWTI, you know, they take the stairs up and then they take the elevator down, right? I mean, this actually went parabolic. This was a pretty good elevator action here too. But for the markets like UWTI, I mean, you look at the move that this DWTI had, and then you look at UWTI, which is the inverse, and it's not nearly as significant as the drop-off you saw in DWTI. So volatility, if the markets continue to climb, may not be the place to be, okay? It may be that now you need to start looking for stocks that are potentially forming base breakouts, right? That through all the carnage, they didn't really drop, they just kind of based sideways until the market could find some footing so that they can bounce. Flag breakouts, right? These types, if we get continuation in the market, these are the types of plays that you're going to want to start looking for that should work in a rising market. So it's flag breakouts, range breakouts, base breakouts, you know, flat top breakouts, all the breakout type plays. If we get a short term, and I want to emphasize short term change of direction in the market, okay, and it's not confirmed yet, but it certainly looks as though we could be set up for that. So we had a little bit of a bounce, and some of the things that I am looking at is the fact that transportation, you know, we've had Swift Transportation. Some of the transportation names that have had nice moves, and remember, transportation was one of the sectors that was bringing the overall market down, right? It was leading the market down. So we have the IWM, the small caps, which had a nice little bounce. That was kind of a leader to the downside. We're getting a bounce in the small caps. We're getting a bounce in some of the transportation names. Let's look at, I haven't even looked at okay, so we got FedEx. I haven't looked at UPS. You know, we're getting a bounce in some of the transportation names. Not all of them, but, you know, a lot of the railroads have been really beaten up to the downside. Norfolk, NFK. Norfolk. I mean, we are in an area for potential bounce. All right, so I'm seeing a little bit of bounce in transportation. I think that is healthy. We're seeing a little bit of a bounce in retail. Now remember, these were the things that I was extremely concerned about from a long-term point of view because they have broken their long-term trends. And this could be the beginning of a trend reversal. It doesn't mean that we can't have some really significant hard bounces and rallies. So there are some things here that are encouraging. Discretionary. I mean, look at where we came down to. We basically came down, we pierced this lower Bollinger Band to some price support and have bounced off that now. See if we get some follow through. Utilities. This is something that is interesting. We talked about the fact that many people could be looking to utilities as a place to hide as the market is dropping. Interesting that utilities actually were leading the indexes on Friday. So people, look, all the fear is still not out of the marketplace. People are still, piling into areas where that they think could be safe and that maybe they can collect some yield off some dividends. So utilities are coming up into an area of resistance. Okay, maybe there is potential possibility that everybody is heading to one side of the boat. So I would be a little bit careful in the utility names in the short term. If you've got some profits, it probably wouldn't hurt to lock in some gains. Energy. I think because energy has been so beaten up, and if oil just manages to maintain its current levels over $30, I think you're going to see some potentially positive action in the energy sector. The one big concerning sector, let's take a look real quick at the S&P 500, the actual index. I know there are a lot of lines here, and I apologize for that, but let's clear out some of this stuff here. Basically we came down to this area of, we bounced right off of this right here, right? This 1814. We're coming back up. Where do I think we come into a little bit of resistance? Probably somewhere around here at this 1972-75 area. If we break through that, I think we're then coming up and going to test in the 2000, right? We're looking for a potential round number test, round number roll. SMH had a decent little bounce. It's got a ways to go before it comes up and tests this trend line. It does appear as though maybe we've got a little bit of accumulation in the SMH. The one fly in the ointment, or the one concerning area, was the IBB. Okay, IBB was extremely weak last week. Okay, and if we're going to have any kind of a sustained short-term rally, I believe that we have to have the IBB participate in that rally. Now, we did bounce a little bit on Friday, not really significantly. And this is even though we had decent earnings out of Biogen IDEC, right? Biogen reported some decent earnings, and it was able to move the IBB in a positive way. Now, I think a name that we really want to pay close attention to is Gilead, which I believe reports earnings next week. This is a potential snapback play. Okay, we may have another day or two where the candle, where it continues to sell off, but I want to take a look at it on a different chart here. We talk about the snapback plays, and when do we like to get involved in snapback plays? Well, oops, let me get to the daily. When we get a candle that is completely out of the lower Bollinger Band. And you can see here with Gilead, every time it's pierced out below the lower Bollinger Band, it has managed to put together a pretty nice little bounce. So here we are coming up into earnings. The reason why this got crushed was because I think it was Merck that came out with a drug that's going to compete with Gilead's Hep C drug, and it's significantly lower priced than Gilead's. Okay, understandable, but here's the deal. I don't think anybody was completely clueless that Merck was going to be coming out with this drug. This stock has gone from $120 and now sits at 83 with a high volume, very high volume capitulation type day in the stock. Now, does that mean we can't get another punch down? No. I mean, I think that we can. Let's back up to the weekly real quick. It could potentially come down here and test in the 78.65 area, somewhere around there. If we go to the day, let's see, that's the weekly. Let's go to the daily real quick. I think 78.65 is a potential area of support. Let me go back to this chart right here. Go to the weekly. 78, maybe down to this 200, right? 74 bucks. It could get down there. I'm not suggesting that it's going to snap back immediately, but I do think that this one is worth watching for a potential snapback. They're going to have earnings. Maybe their earnings come in better than expected. Maybe they come out and suggest that things aren't as terrible as everyone is projecting them to be. Could set it up for a nice snapback trade. Okay, so and I think Gilead is, it's one of the big names. So if Gilead can snap back hard, report, something that is a little bit better than the street is anticipating moving forward, I think it could also help lift the IBB. And we need the IBB to participate if we're going to have a continued move higher in the overall markets. At least that's my belief. The other thing that has happened that was interesting on Friday was we had the dollar that was up. We had a market that was up. We had oil that was started decoupling, and we had gold, which was also up, right? And gold is coming up into this longer term trend line. Really, where we need to see gold break out of is, over 110 or 109 with conviction. But if it breaks this trend line, takes out 108, I think you can see a nice move in gold. I think you can also see some nice action in the GDXJ and GDX. I think you want to keep that sector on your radar. It's interesting that gold is, it's a perceived safety trade. If we can't break through 108 with conviction, you could see a sell-off in gold. But it does appear as though there's been some accumulation. Now, that could have been out of fear that everyone is thinking the market is going significantly lower, right? Bear market. It could be we haven't had necessarily great earnings so far. Earnings could continue to come in weak, but maybe the guidance isn't all that bad. Maybe things aren't as bad as everyone had anticipated. So could those earnings already be priced in to the markets? I don't know. We don't know. Nobody knows. Let's see what happens in the market over the next week. I think it's going to be very telling. Let's see what happens with the employment report on Friday. Okay. Let's see what else. Oh, if we do get a strong bounce in the IBB, I think this Labu could be a very interesting place to play. One to keep on your radar if IBB does get a nice bounce. Mid caps actually had a nice little bounce along with the IWM. Look for potential continuation. Where do I think we could see some significant resistance? Somewhere around the 245, 247 area in the mid caps. So listen, my overall, I am bullish for next week, like I was bullish last week. It didn't quite play out the way that I had hoped last week. However, like I said, there's some love in the air. We're heading into a new month. We've got the Fed out of the way. Maybe we get a clear window without anybody suggesting they're going to raise the rate 4 times this year for the next couple of weeks. Maybe we get some more quantitative easing type action out of China. and some free, easy money policies from around the globe that could give us some short-term. Hold on a second. Okay, sorry about that. Where was I? So, listen, I'm still bullish. I think that maybe we could see some follow through on this bounce. I think that maybe we have really priced in some negative news. I think we've got some areas in the market that are showing some compelling strength, and maybe that we've got overdone in the short term. I am not suggesting that we still don't have some really significant things that need to have happen for me to be full-blown bullish again. For the long term, I think for the short term, we could get some really nice bounce action. I think there's opportunity for short-term swings. I think we need to be aware of where there is going to be likely resistance on the markets themselves. But for the short term, next week, I'm pretty bullish. And what we want to see is we want to see the IBB participate. We want to see a good bounce in there. We want to see continuation from the IWM. And, some good earnings out of Google and the like would absolutely help set the tone. Apple was down from $130 a share. It was down 30% from its high when it reported numbers and lowered guidance. So the question is, was that priced into the stock already? That's the question. So let's see how this week works out. I am going to be doing a live stocks to watch video tomorrow morning on Ticker TV at 8 o'clock Las Vegas time. If you can't make the live session, but you want me to go over a couple of stocks, email those to me, tweet them to me. I'll be happy to do it tomorrow morning. And that's it, folks. That's it for the market wrap. There's a lot to think about, a lot to absorb, but for the most part, I think we could get some more continued bullish action in the short term now that we have the Fed out of our way. Okay? Enjoy the rest of your Saturday, and I will see you tomorrow morning.